Good morning and welcome to another special edition of Coffee with Cole. This is your real estate guide, Cole Ridley here. Your lending guide, Joey Jones, has joined me again for another topic. Today we're going to be talking about types of lenders, types of loan programs, those kind of things. But first, I'm drinking out of my naughty mug. Whenever I'm with Joe, I get in trouble. I tend to be a little naughty. No, that's not true. Christmas is coming up. It may only be October or November, but Christmas is on its way, and it's never too early to start celebrating.
That's right.
But anyway, we'll get into this topic. And Joe, just tell me, really quick synopsis, what are the different types of lenders? Because you hear things about banks and brokers and lenders and loan officers, and there's a lot of different terms for it.
There are.
Put them into some groups for us.
Okay, so a high-level overview, I will say, is banks, brokers, and delegated correspondents.
Okay.
And a bank typically is a lender who they are the investor. They're the only investor. They publish their rates. You have to go by their guidelines.
Right.
Not always the best scenario. I've worked at a big box bank before. I won't ever again.
And banks were really common. I mean, you watch, speaking of Christmas, you watch It's a Wonderful Life. They're buying from the bank,
right?
Or they're buying from the old savings and loan, which is what the Baileys worked for. Some good knowledge right there. But it's kind of gotten a little bit more split than that. And the banks aren't as common to get a home loan from as they used to be.
We've seen a really interesting shift in the market in that it used to be you go to a bank.
Yeah.
You're supposed to go talk to your banker. It's shifted. It used to be 90% of the loans originated were from a bank and 10% were from a mortgage company. It's the opposite right now.
Yeah.
And the reason for that, and that's what we are, is we're a delegated correspondent, is we can shop multiple investors. So the interim between a bank and a delegated correspondent is a broker, and most consumers call me and say, "Are you a broker?" Well, technically we're not a broker because in the broker scenario, the loan officer has to take your file and give it to the end investor to be underwritten. And having worked at a big box bank, I don't like that model because you lose control of the transaction.
There's a third party.
There's a third party, exactly.
Yeah.
And with the larger organizations, sometimes the customer service isn't always the best. The timelines, like turn times and underwriting, aren't always the best. So a delegated correspondent, our model is we do shop multiple investors for you. We want to make sure you get the best product, the best rate.
Okay.
But we do it all in-house, from application to processing, underwriting, funding even. We have access to the big bank's money, but we do it all in-house.
Sure. And I have a list of lenders that I give all of my buyers. Joe's obviously at the top of that list. I've got delegated correspondents. I've got brokers. I've got banks. There are different reasons to use different ones, but why would you say the biggest reason that a delegated correspondent would be the best way to go? What sets you apart?
So I like to explain it from a very high-level overview in that Fannie Mae, Freddie Mac, and Ginnie Mae, they set the general guidelines.
Government entities.
Yeah. They don't specify a minimum credit score, a maximum debt-to-income ratio. They don't. They say, here are the general guidelines to follow, because they don't lend money. The individual institutions, the investors, the lenders, they will set the guidelines. They'll say minimum credit score of 620 or 640 or whatever. Having access to multiple vendors or investors allows us to shop to make sure, one, we get the right product with the right investor, because investor A may say you can't do this in this scenario, but investor B may. So we find the best product with the best pricing out of all of the options.
And from what I've experienced, and I'll let Joe kind of refute this if this is not true, what I've noticed is when I work with a banker, they're a little bit less flexible when it comes to getting creative and getting a deal done. They've got pretty strict guidelines as far as interest rates and shopping the best interest rates. They really don't have very much flexibility. They're kind of given what they get, and that's what they get. Again, refute me if I'm wrong, but you're able to be a little bit more case by case, a little bit more creative, a little bit more flexible when it comes to getting a deal done and getting our buyers in their dream home.
Right, absolutely. And like you mentioned in a previous video we did, that home ownership is really good for the economy. It really is.
Yeah.
It used to be back in the old days, you couldn't buy a house unless you had 20% down payment. Well, PMI companies were launched. HUD created FHA loans, which has private mortgage insurance, which allows you to put much less of a down payment. So it's good for the economy. Homeowners buy things for their house. They fix up their house. It's good. So I don't know if I answered your question.
Definitely.
Straight.
And I think the thing that I always tell buyers too is you want to work with somebody who has the ability to make your situation work. One of the reasons I'm a successful realtor is I custom fit my approach to whoever I'm working with. My counseling background allows me to do that, to kind of meet you where you're at. And I feel like that's one of Joey's biggest strong suits as well, is really working that case by case, making sure that the deal gets done. So here's a minute for you to toot your own horn.
Okay.
I shout it from the rooftops. Joey Jones, he's the guy to go to. What do you think is the biggest thing that sets you apart from not just the different categories, a banker and a broker, but you specifically from any other guy on my list?
Okay. First of all, thanks for shouting from the top of the hill. That's awesome. I will say
he does it for me, so it works out.
Absolutely,
Yeah.
absolutely. I will say, number one, it's our team, and our team is my wife Jessica and I. We're your resource. Like you're only going to talk to us, our processor, and the closer. Like it's all in house. It's all done. I've been in banking since I was 18 years old. I'm very analytical in that I'm going to look at all the details. My wife is extremely organized, and because of that, when we are doing an analysis and a pre-approval, we make sure that it goes smoothly. There are no surprises, and because we're so thorough, we check tax returns, everything. So when we get into underwriting, and you can see our reviews, if you look online, we really do want every single client to feel like they're our only client.
Yeah.
And we try to do a phenomenal job every time.
And for the amount of volume that you guys do, and don't let this poor background, we're not homeless. Joey does an amazing job, he's very successful, but he doesn't treat you that way. He's a big time mover and shaker, but you're going to get the personal attention from him and his wife Jess, which kind of leads me, perfect segue into what we're going to be talking about next week. I'm actually going to be talking with Jess personally. Super excited about that, about the underwriting process, the process from getting an offer accepted to closing. So that'll be next week. And once again, Joe, thanks for coming on. We'll talk to you next week.
Thanks for having me. Have
Stay
a great
naughty.
day.